guys, this is the Investment Venturer, and welcome to the Investor Next Door podcast. Today, we'll be doing a breakdown of the Buy Now, Pay Later platform, Sezzle, traded on the Nasdaq under the ticker symbol SEZL. I should let you guys know that anything said on this podcast should be used for information and entertainment purposes only. This is not investment advice, and I do not recommend diving into any project or trying any strategy without doing your own research first. Overview and history. Founded in 2016 in Minneapolis, Minnesota by Charlie Youakim, CEO and Executive Chairman, Paul Paradis, Chief Revenue Officer, and Killian Bracke, former CTO until 2022. Early funding included over $17 million in equity, a $100 million debt facility from Bastion Capital, and a $30 million raise via IPO on the Australian Securities Exchange, ASX, in July 2019. Originally launched with ACH payments and cashback features, the business pivoted in 2017 to its current BNPL model. Expansion key milestones: entered Canada in 2019, became a public benefit corporation in 2020, debuted in India later that year, and began operations in Brazil in 2021. What Sezzle does. Sezzle offers an interest-free installment payment platform where users can typically choose pay in 2, half at checkout, half 2 weeks later. Pay in 4, over 6 weeks in 4 installments. Key features include real-time underwriting that considers factors like soft credit score checks, order history, and spend, without impacting your credit score. Repeat users who pay on time may qualify for higher purchase limits. Merchants benefit from higher basket sizes and improved conversion, especially big names like Amazon, Target, and Walmart are on board. Beyond payments, Sezzle positions itself as a socially responsible fintech. As a B Corp, it's committed to financial empowerment, environmental and social initiatives, and corporate transparency. Sezzle makes money mainly from merchant fees, subscription products, and customer fees. Here's the detailed breakdown. Merchant fees, primary revenue source. When a shopper uses Sezzle to split a payment, the merchant pays Sezzle a fee. Typical fee, 5 to 6% of the purchase amount plus a flat transaction fee higher than credit card fees, but merchants accept it because Sezzle increases sales conversion and average order values. This is the bulk of Sezzle's revenue. Consumer fees. Sezzle markets itself as interest-free, but it still earns from certain user-related charges. Rescheduling fees, if a customer pushes back a payment beyond the free reschedule allowance. Failed payment fees, charged if a customer misses an installment. Reactivation fees. If an account is suspended due to non-payment, a small fee may apply to reactivate it. These aren't interest charges, but they act as service fees to offset risk and collections costs. Subscriptions and premium products. Sezzle Premium/Sezzle Anywhere, a paid subscription plan giving shoppers access to additional features, for example, higher spending power, broader merchant acceptance. Sezzle Up, a service that reports positive repayment history to credit bureaus, helping customers build credit, can include fees. Monthly on-demand subscriptions, MODs, recurring consumer-driven subscriptions, approximately 748,000 active as of mid-2025. Partnerships and financial products, virtual cards and co-branded debit credit. Enable shoppers to use Sezzle outside of integrated merchants, earning interchange fees and spreading adoption. Long-term financing partnerships. With banks like Ally and WebBank, Sezzle earns commissions when users convert to longer-term installment loans. Receivables and financing. Sezzle often sells or securitizes receivables, the installment payments owed by consumers, to investors and lenders. This gives Sezzle upfront cash and reduces credit risk, while still earning fees for originating and servicing the loans. In short, Sezzle doesn't make money from charging consumers interest, like credit cards. Instead, it earns Most revenue from merchants, 5 to 6% per transaction. Supplemental revenue from consumer fees, rescheduling, failed payments. Recurring revenue from subscriptions and partnerships, cash flow from selling receivables to investors. Financial performance and stock highlights. Financials and growth. Fiscal year 2024. Adjusted EBITDA soared to $88.4 million, up 195% year over year. Cash, $98.3 million. Debt drawn, $105 million of a $150 million credit facility. Q1 2024. Operating income rose 155% year over year to $13.8 million. Net income reached a quarterly high of $8 million, surpassing fiscal year 2023. Fiscal year 2025. Guidance: net income projected at $80.4 million, EPS of $13.25, up from $12. Anticipates 25 to 30% revenue growth, expects effective tax rate of 25%. Market performance and analyst coverage. Nasdaq listing since August 2023 after delisting from ASX. 2024 stock performance was explosive, up 1,439% YTD at one point, fueled by triple-digit earnings and strong forward outlook. January 2025 announced a hike in 2024 earnings forecast above $9.80 per share. Stock jumped 19%. June 2025. Analysts initiated coverage with an outperform rating, forecasting 60 to 65% revenue growth and $3.25 earnings per share for 2025. Stock hit record highs, yen $137 per share, and soared 228% year to date. Sezzle now reported 2.7 million active consumers and $2 billion in merchandise volume. Sezzle, risks versus upside. Red key risks. Credit and default risk. Even though Sezzle positions itself as interest-free, it still fronts the money to merchants and relies on customers to repay on time. Rising defaults, especially in weaker consumer segments, could eat into margins. Hindenburg's December 2024 short report alleged risky lending practices and noted some high-risk borrowers were charged 12.65% interest, hurting the interest-free image. Regulatory pressure. BNPL is increasingly under the lens of regulators in the US, Canada, and Europe. Future rules may force stricter underwriting, clearer fee disclosure, and consumer protection standards, raising compliance costs and slowing growth. Competition. Sezzle competes with giants like Affirm, Klarna, Afterpay Block, and PayPal's Pay in 4. Larger players have deeper capital pools, broader merchant networks, and more established brand recognition. User base growth concerns. Despite strong financial results, critics point out Sezzle's active consumer count is growing slower than its revenue, 2.9 million active consumers versus 748,000 paid subscribers. Heavy reliance on a relatively small core user base could limit scalability compared to Affirm/Klarna. Valuation stretch. Stock soared 1,400% plus in 2024 to 2025, currently trading at approximately 50 times earnings. If growth slows, investors could re-rate it downward quickly. Upside potential. Explosive growth and profitability. Revenue more than doubled YoY in Q1 2025, plus 123%. Net income margin is unusually high for fintech. Sezzle reported approximately 48% operating margin, far above competitors. Guidance for fiscal year 2025, $120 million net income and 60 to 65% revenue growth. Merchant partnerships, integrated with Amazon, Walmart, Target, and thousands of smaller retailers. Higher merchant fees, approximately 6%, give Sezzle a richer take rate than many rivals. Affirm's is approximately 3%. Diversified revenue streams. Merchant fees remain core, but subscriptions, premium, Sezzle Up, virtual card, etc., are growing fast. 748,000 monthly subscribers provide sticky recurring revenue. Receivable sales to investors reduce risk and bring in financing income. Niche positioning focuses on financial inclusivity, soft credit checks, smaller transactions, and credit building with Sezzle Up. Certified B Corp and Public Benefit Corporation branding may win favor with Gen Z/millennials. Stock momentum and analyst support. Analysts recently gave outperform ratings, forecasting Sezzle will beat 2025 guidance. If growth continues, Sezzle could expand its market cap toward larger BNPL peers. Bottom line. Risks: credit defaults, regulatory scrutiny, slower user growth, and frothy valuation. Upside: Sezzle is already profitable, fast-growing, and diversifying, with a unique brand identity in a crowded BNPL space. If Sezzle sustains its growth and keeps default rates under control, it could evolve into a billion-dollar BNPL leader with long-term staying power. But if consumer credit weakens or regulators clamp down hard, the downside could be sharp. Sezzle has carved out a notable presence in the BNPL space through a socially conscious, interest-free financing model that appeals strongly to younger consumers and high-frequency shoppers. Its financials reflect rapid growth, improved profitability, and expanding merchant and consumer bases. Stock performance has been a standout in 2024 and into 2025, though regulatory, operational, and valuation risks remain. That's all for today, folks. Thank you for listening to my podcast. Be sure to subscribe to the Investor Next Door podcast on your favorite podcast listener. If you're watching on YouTube, be sure to like and subscribe for future episodes. Follow me on social media to stay updated. Twitter X @InvestNDPod. Instagram @InvestNDPod. Share this episode with your friends if you've learned something valuable from this podcast, and I'll see you guys next.